Good morning, traders. Welcome, everybody. Let everybody file in here. Good morning. Good morning. Hope everybody's having a great morning. TGIF. Good morning, Will. Everybody's with their hair on fire because it's monthly OPEX. Yada, yada, yada. Largest expiry ever. Is that what we're hearing? Yeah, TGIF. Totally agree. Looking forward to Christmas next week. All right. Welcome, everybody. Give everybody another minute to file in. All right, let's go ahead and jump right into it. Good morning, everybody. Thanks for joining us this morning on this Friday monthly OPEX. As always, this is Michael coming to you from Game Edge. Yeah, we'll cover that too, Daniel. It's Michael coming to you from Game Edge on Friday, December 19th with our pre-market prep session. As always here at Game Edge, we'll cover those three most important pillars of sentiment, structure, and trend. And then we'll look at some individual equities at the end. So let's go ahead and jump right into it. If you followed us for any amount of time, or if you're new following us this week, make sure you go back and look at our previous pre-market preps. I've pretty much been here every morning describing what we're looking at right now, which is our market trend model. It's based on the tick index. The bolded white line is your intraday instantaneous CT or cumulative tick. This is in a nutshell telling you buying versus selling in the overall market. And then our moving averages here are shorter term, what we call railroad track moving averages are on there for momentum. The bolded white line is your 0DT trading or intraday, and then the momentum or railroad track moving averages are your 1 to 3 day swing. As you can see, scrolling back over here from upper left to lower right, the cumulative tick has just continued to the downside, obviously indicating more selling versus buying in the overall market. So 75% of the battle or 50% of the battle is being on the right side of the overall market. So if this is continuing to trend down, there's more selling occurring. So obviously you want to be not long, protecting your capital at risk and trying to short the market if that is something that's within your overall trading plan. And then the other takeaway is the colored ribbon, which is our longer look back period. This is how we trigger our mechanical portfolios, has been off for numerous days. So we've not been entering long positions as long as this bolded white CT is below the red. And we're seeing the red and the cyan actually get a negative slope now and kind of compressing to the downside. So we'll see if this bolded white CT emerges below the colored ribbon. This would be indicating more weakness in the overall market and most likely see a larger pullback. Or do we get to recover back up towards the upside and emerge outside the red, which would indicate that we may be starting a new uptrend or a new bullish cycle in the overall market. So we'll continue to watch that. Breadth indicator, new highs versus new lows were basically the same yesterday, so really no takeaway there. Institutional filter tick plus 1,000 minus 1,000 was selling to the downside in the afternoon, but not significant that we've seen the past 4 to 5 days. So we'll continue to watch this. If this improves, then most likely we'll have some upward movement within the overall market. All right, moving on to our trading view, MTM or market trend model that we released this past week. Again, we've got extensive feedback and members as well in the community have been using it to profit and use it to stay on the right side of the market. You can see this continues to the downside also, even though we did have a couple blips of buying to the upside, but it was continuing to be met with selling very rapidly. And these moving averages or shorter term moving averages are triggers for us. Once we cross below, we're looking to get short the overall market or at least reduce capital that's at risk. And then as we continue to the downside, every bounce, we're continuing to look for an opportunity to short the market until we recover these shorter term moving averages. So again, this has been a vital tool for us this past week in this longer term downtrend that we released via TradingView as a market trend model. We also have this for Thinkorswim. So come join us in Discord. You'll have all of this code that you can paste as an indicator for TradingView and start using it on your charts to help you stay on the right side of the market. All right, let's move on to the SPX. It's the largest, most notional value options complex. That's why we look at it. We separate the SPXA from the SPXP. You'll notice that our web app, we've changed these from green to red. There is an option that you can use green to red, but we've noticed and had some feedback from multiple members that have some issues with looking at green to red, not being able to see the colors. So we provided other options for those people, and that can be changed in the overall settings. So SPXA, we are call dominated above and below spot price. So the market should continue to still be supportive from an institutional standpoint. You'll notice that we're smack dab in the middle of a transition. So really this is just this is no urgency either direction for market participants, and we'll continue to chop around these ranges until we get above top of transition or below transition from an SPXA or institutional standpoint. Again, these are the tankers that basically control the overall direction of the market, and we're excluding the 1219. So this is the January expiry now, and we are call dominated. So we'll continue to watch this to make sure it stays call dominated, which would be indicating that pullback should be supportive from an SPXA standpoint. All right, moving on to the SPXP, all expiries turned on. You'll notice that we are put dominated. So again, that's a little bit more bearish. You'll notice the transition extremely wide, and we closed below that transition yesterday. So the first edge for the bulls to get above would be the 6,800, 6795 to 6,800, which is the bottom of transition. And then you would be within the overall transition. So this most likely would be extremely choppy. And the next area for the bulls to recapture would be 6,845. Top of transition for an opportunity to move up towards that 6,900 level. If we do stay below transition, we'll consider this a more bearish state and an overall weakened structure. You see 6,750 continues to be that downside area that we see supportive type action and continue to bounce off of. If we get below 6,750, we'd be looking for 6,700. That would be the expected move that's denoted here with the purple box, and most likely supportive type area that would come in on a downside move. So again, put dominated for a day, or put dominated for all expiries in the SPXP. All right, let's move on to the SPXP GEX ratio. This is like a put call ratio, but it is weighted to more short dated call gamma versus short dated put gamma. So understanding what is happening right now with the overall market and structure. We tried to push up yesterday, but was rejected pretty quickly. Our GEX ratio, I'll zoom in here, is still below the 1 level. So again, this is indicating short dated put gamma is overriding short dated call gamma and outpacing. This gives an edge to the bears, even though it's just slightly below 1. So if you're a bull, you want to see this moving back above 1 with a positive slope, indicating out the money call speculation is coming into the overall complex. And most likely that would lead to some sort of price appreciation. If we stay below 1 and see this continuing in a descending or declining slope, then most likely the SPXP will follow that trend as the short dated put gamma out of the money puts and in the money puts overhead are controlling the overall complex, which would be a weaker structure and difficult for price appreciation. All right, moving on the SPXP delta balance. Again, we just separate the option structure from above and below spot price. So the right-hand plane, which is your green dotted line, that's above spot price. That's your out of the money call speculation as well as in money puts. And you can notice that it is well below the 0 level, which is the balance point, indicating that in the money puts are definitely in charge overhead. Out of the money calls with a negative slope are not coming into the overall complex. Conversely, the left-hand plane, which is below spot price, we are still in the money call dominated below us, which we'll show on the net stack command here in just a minute. But we also have a negative slope on that left-hand plane also. And the delta balance is slightly above 0. The left-hand plane is pulling it up. So again, this is a very cautionary state unless we see the right-hand plane continue to improve as well as the delta balance continue to improve. So projected expiries on out in time towards the 22nd, which is next Monday. You'll notice that the delta balance is below 0. The left-hand plane is below 0 after this expiry. So that is showing you that a significant amount of in-the-money calls are being monetized or expired in the overall complex. And that drops the overall delta balance below 0, which is bearish. You see the right-hand plane does slightly increase above 0, but it's really not significantly speculatory to the upside. So again, a total cautionary structure after this expiry into next week. Unless we see this improve significantly, most likely it will be status quo with chopping around and possible weakening into next week. All right, SPXP net stack command, just what I discussed. Left-hand plane, we're in the money calls below us, but you'll notice that strike is significantly below any spot price that we're most likely going to look at for now. The right-hand plane is in the money puts overhead. We call this a locked horns condition. With in the money calls below, in the money puts overhead, it's difficult for price appreciation in the overall structure. What you want to see is this completely call dominated, or at the very least, the net delta needs to be out of the money calls, and the net delta in the left-hand plane in the money calls. That would lead to a more positive, more favorable positive gamma call dominated structure for price appreciation. To the upside, you see that right-hand plane or that goalpost to the upside at 68.50, most likely not moving anywhere near above that today, again, unless we see a significant out of the money call speculation sentiment structure change across the board. You notice gamma at 6,800. We need to say get above that and move across that for an opportunity to move up towards 68.20. And then you see net van at 68.50. We do have a positive net van in the right-hand plane. If we see out of the money, or sorry, if we see volatility drop as well as out of the money calls come in, then we have an opportunity to move up. Again, 68.50, 68.20 for us is that upper bound that we'll be watching very intently if we move up towards there, and then above that would be 68.50, and then 67.50 to the downside is that lower bound where we'll be watching. If we move below that, structure weakens pretty significantly and we move down towards 6,700. All right, let's move on to 0DTE. We are put dominated to start the day. Let me check the trading view chart. So we're right at 67.85 transition area as we come into the open. So again, this is going to be a vitally important area to get above for the bulls for an opportunity to price appreciate up towards 68.20.25. And you'll notice that's where the charm extremely kicks in, which will be the overhead headwind. You also know 6,800 is peak X there. Our anticipatory thesis would be that we would test that first and see if we get some sort of stalling and rejection via the charm overhead. And then if we move above 6,800, we have the opportunity to move towards 68.15 to 68.20, but we're still within the overall DEX transition, which is the blue box, as well as the drunken sailor range. Drunken sailor range played out extremely well yesterday. Go back and review our pre-market prep video. We talk about the drunken sailor range as being a very low exposure, net low OI area. We do have a couple higher strikes in there, and those are obviously are important, but you'll notice the lower net OI, it just allows price to be completely pushed around by intraday call versus put speculation. What we're seeing yesterday was just back and forth, touching up towards that 6,800 level and then rejected off of that multiple times, and then move back down towards 67.50, 67.60 towards the lower bottom of DS. So again, lower bound 67.60 at COTMP. Historically, we see some monetization there of out of the money puts when they go in the money. If we get below 67.60, we start capturing more negative net deltas to the downside, even though we do have a little bit of supportive charm below us. We look for a move down towards 67.20 if we see out of the money put speculation via our vol-m command. And then we'd also have to see our MTM market trend model continue to trend to the downside, which would indicate more selling in the overall market. So that's our thesis for today. Below transition, weakened structure, watch the bottom of DS. Above transition, we have the opportunity to price appreciate, but again, it's going to be a difficult move uphill with significant in the money puts overhead, as well as this charm continuing to grow throughout the day. And then obviously see this large bar at 68.50. We do not believe that we have the opportunity to go above that at all. Even if we test up towards 68.40, you'll notice again, that's the expected move for the day. Plotted over here, 64 points, 0.95% for the day. So that's our levels. Go ahead and mark those on your chart and use those for your trading plans for today. Let's go ahead and move on to our trading view chart. I've already marked the 0DT transition level for today. It is 67.85 up towards 67.90. We've already discussed that. So we'll see if we can emerge outside of that. And then we have 6,800 overhead, 67.95, which is the full expiry transition areas, which again will most likely provide some resistance type action overhead. And then if we get above that, we'll really need to see how the money call speculation start to come in for a large push up towards the top of the drunken sailor range. So with that, I think I've covered everything I wanted to cover this morning. Thanks everybody for joining us. We'll go over individual equities, but GameEdge.us, come take a look. The education newsletter that's produced every weekend. Put your email in here. We'll deliver that to you for free. Again, goes through all of our thesis, our tools, and how we navigate the SPX option structure. And as always, check out our free course, GameEdge Fast Pass. Covers all of our tools, all of our thesis, flagship options course. Great education for free. Check that out. And then our blog has tons of education articles. If you're bored over the holidays, make sure you check out these education articles. that go through everything we talk about on our X posts, our YouTube, and our open mics that we have on Sundays that are open to the community. So, all right, let's go ahead and jump right into our Gamma Edge web app where we can view individual equities. Let's go ahead and take a look at Oracle for this morning. JS, hope you're still with us. So call on, let's go back to the 19th. So this expiry, we're call dominated. We systematically go through, we check the gamma condition, we check the overall structure, and then we look at where we're at with transition to spot price. So spot price above transition. So that is bullish. 190 to the upside is peak X though. So that's that highest level, sensitivity level, or convexity level overhead that we most likely see some stalling. So not too far away. After this expiry, as we head into the 26th, we are in the overall transition area. So again, we need to get above transition, and you see the actual structure move up to 200. So I think that's an important level to the upside for speculation and convexity. So after this expiry, the structure advances, looks good up towards 200, and you are call dominated. All right, DAS or DASH dash. Let's look at this. Okay, so what I want to caution you with is this does meet our 100,000 OI filter, but is a significantly lower OI than in many other stocks like Tesla, Nvidia. So our dealermetric controls may not be as valuable in this. So just word of caution, even though we have 30,000 OI for this expiry, call dominated, you're above transition, 230 to the upsides, that highest convexity speculation area that I would be looking for. And then we see spot price actually closed at 230. Actually closed at 230 yesterday. So again, structure advances slightly to 235. We are call dominated there, but again, very low OI. So I would not rest my hat on looking at the overall dealer metrics and speculation on this one. LMMD, a little bit higher OI as you see, 64,000. Significant difference than what we saw in Dash there. Call dominated, you're above transition. 85 is that upper level. I'd look for some stalling first. After this expiry, we see the structure move up to 90, and you're above you're at the top of transition. So I would, and call dominated. You see that overhead charm though, that's going to be a little bit of a headwind as we traverse up towards the 90 level. So I'd say it'd be a slow move to the upside, but 90 would be the speculatory area to the upside I'd be looking for on LMNT. And then to the downside, obviously, transition area and 75 to the downside. Walmart, okay, let's look at that. Call dominated for all expiries. Let's look at this expiry. Call dominated, looks like, okay, so we closed at 115. So you're right at that PX level and speculation to the upside for today. So I would not expect Walmart to move much. Structure does move up after this expiry towards 120, so that's bullish. You'll notice that you're right at the top of transition, so you need to recover that. Looks like you're going to have a difficult time at 117. That'd be your first area of stalling. And if you're over 117, 120, and then 112 looks supportive to the downside. Significant in money calls below should be supportive, though. All right, app. Let's get app. Let's see where app closed. Our spot price is not updated there, so let me check where app closed at. So it looks like we're trying to push through transition there, pre-market. So app closed yesterday at 694. Okay, let's go back to that. 694. So you are just above transition. 700 is that highest area of sensitivity to the upside. For speculation, call dominated, everything looks good there. And next expiry is call dominated, but 700 structure really doesn't advance much. So I think 700 to the upside would be that area I'd be watching for some stalling or at least target area. SoFi, let's look at SoFi. Spot price 2650, you're right at the transition level. You are call dominated on all expiries. So spot price is right at transition, not really seeing much move up for today. It's actually put dominated for today. And then 1226 structure really doesn't advance, and you're still put dominated on SoFi. So I anticipate a little bit of weakness on SoFi on a shorter term time frame or shorter term expiries. All right. Okay, let's go back to TradingView. All right. So we're trying to move above transition. 6,800 is going to be that first level overhead that will look for some Yes, YouTube, Butch, thank you. That will look for some stalling. I talked about transition level and then opportunity for get above 6,800 for a move up towards 6,820. So with that, thank you everybody for joining us. Like and subscribe on X and YouTube. You'll be notified when we go live with all of our content, as well as our midday content, post-market recap, and pre-market content, and then review any of the stuff for this week. I think we've had a great handle on the overall structure, how we navigated it, why we were looking at weakness, why we're looking at the areas we're looking at for today. As always, manage risk. We're a little bit cautionary for a significant move up, even though everybody's talking about the largest expiry ever and possible Santa rally. But the structure is really going to have to improve, as well as our market trend model improve throughout the day for us to have a large move up past 68.20 would be that upper bound I'd be looking for. So thanks, everybody. Manage risk as always, and we'll see you later.